Welcome to Key Points in 3 minutes for the month of November. This month we're looking at high-level political developments in Japan and China. We turn our attention to the ECB's policy initiatives, and we review the earnings prospects in the United States and Europe. So turning to our first point, well, against a backdrop of still surprisingly robust global economic growth, we're seeing some political developments that are really important in Japan and China. In the terms of Japan, Prime Minister Abe and his LDP coalition won the slap lower house elections, effectively giving them the mandate to continue the Abenomic policies of trying to reinvigorate the Japanese system and Japanese economy. His term through to 2021 will make him the longest serving premier in Japan, and we think this is a very good prospect for investors. We've got further clarity in terms of policy in Japan going forward. In terms of China, the 19th People's Party Congress concluded with the Premier Xi Jinping consolidating his power base and making it very clear that China is embarking upon a new era. An era where we'll see more consistent growth going forward, an era where China will take an increasing leadership position in terms of climate initiatives and global trade, and one where we think that there is more clarity in terms of direction and consistency in terms of policy. Now, when we turn to the ECB, well, the ECB announced a very pragmatic policy initiative, extending quantitative easing, yes, at a reduced rate, but still buying 30 billion worth of bonds and credits from December into at least September. Now, the important thing is here that they didn't put an end date where there'll be a hard stop to quantitative easing. They left that open, allowing, we think, investors to believe that the economy can reach a more self-sustaining velocity. And indeed, given that open-end approach, the likelihood is that we think that inflation will indeed gradually pick up towards their target. So a constructive initiative, we think, from the ECB. Now, when we turn to our last point, we're seeing this better economic environment translate indeed into better earnings prospects for corporations in the United States and in the Eurozone. Earnings growth on a year-on-year basis in both regions is up about 8 to 8.5%, and it's giving some credibility to this equity market rally that we've seen so far. Fundamentals are getting better, and importantly, not only are profits picking up, but we're seeing the revenue line also improve. In other words, companies are selling more, whether it's into the consumer or into the private business sector as well. So net-net, it's still a very good environment, we believe, in terms of fundamentals for the equity rally. But given how much they've moved higher this year so far, there's likely to be a bit of profit taking, we think, as we get into the very back end of this year.